It's Wednesday, June 4th. Let's level up. Market was consolidating today. I think that's healthy after the big run it's had. However, we have the jobs number on Friday, so I think we could be into some chop, maybe a little bit of pullback, and then we'll get the decision, I think, on Friday with the jobs report. If you want to do jobs day +1, you know my thinking. We could often be long above the jobs day high, neutral inside, short below. And if we're looking to trade intra-range, we could use the VWAP long above or short below. As far as VIX goes, I've mentioned before, for the bulls to be able to make and maintain new all-time highs, they're going to need to sweep the leg of 17.02. If they do that, there's the path of least resistance for volatility to be lower. Always on guard for look below and fails. I don't love the idea that we're coming into this jobs report with the volatility coming in this low. It's often a recipe for disaster. Usually what should happen is after a big bad event, you get volatility drained. So sometimes when we come into these big events with volatility elevated, I like to short volatility in the event that we will see a contraction. The fact that we're coming in near the lower end of the range has me a little bit concerned with that type of a trade. As far as the ES and the NQ go, we seem to keep running into sellers at or near the 6,000 level. We have a bit of a range here that's key, this 59.77.5 to 59.93.5. Anything below that could repair the prior session's rich close at 59.64.5, and then if there is a larger liquidation break, the 59.41.75 to 59.52.5 area, which will line up with the 200 MA 30-minute by the time price could get there, will likely be the next big decision level. If there's price that accepts below there, I think we're in for a larger liquidation break. That's sort of the maximum allowable pullback for things to stay healthy from up here. As far as the Qs go, the apples to apples on the repair of the rich close would be 21,626, and the apples to apples of the must hold is 21,529.75 to 21,558.5. If that area can't hold, and I do realize it's a narrow band, we'll likely test back to the 21,337.5, and then that really is the do or die level. As far as SPY goes, bulls need to hold over 595.54. If they can do that, we'll likely see the 600 level, maybe the 610s and 613.23 all-time high retested. If there is a liquidation break that takes us below that level, we could have a mini look above and fail of range, and we could pull back to as much as 585.10, which of course is the 78.6 of the range and the absolute must hold for still prior prices to stay in play. Anything below there, I think, risks 575.35 and maybe the 5.9 gap fill at 564.34. If you want to do some put ratios or put spreads as a hedge and or just targeting those levels, that gap fill would be the place to target. As far as the Qs go, we're bumping up against the old channel high, obviously stronger than the SPY. We usually want to see the Qs leading anyhow. I've told you this zone between 511.19, even all the way up to 540.81 is a big prior consolidation zone and could be choppy with resistance. I think now bulls will need to hold today's small low of day at 525.97, or you could stop out. That risk would be to 519.47, which is the 10 MA, the 20 MA at 513.97, and maybe even all the way pull back to the 511.19, which of course is the 78.6 of the range and the absolute must hold. If that were to fail, we could have a move down to the 500 level and maybe even fill in the 5.9 gap fill to 487.97. But remember, we already had a look below and fail with a 78.6 on 523. So prices should continue still higher. Apple had a bit of a downgrade today. I think that that's obvious. We've been seeing this happen with this stock. I think that we just got into the next resistance zone, of course, being 203.93 up to 208.42. After that, there's a zone between 208.42 and 214.66, and then it's 214.66 up to 219.38. After that, it's just flat out the gap fill to 223.89. On the downside, I'd be careful if we started losing the 200-ish level. That really does need to hold. NVIDIA acting pretty well. We're back up near the earnings highs. Remember, on the 528 earnings pop, we got up to 143.17. After that, we had a liquidation break. We actually got down to the 528 earnings lows at 133.25 and now bouncing, so we seem to be consolidating in that range. I would be very careful if price couldn't hold 140 at the max, 138.90 here. On the upside, we could clear and go to the channel high at 148.26, and obviously the all-time highs in the 152s. I think that this should quote unquote go higher. Given the fact that President Trump is talking to President Xi, if there's any deal with that, could be favorable for chips, and NVIDIA would be the best one to benefit from that. Tesla's been on a bit of a ramp too, but pulling back here. We had talked about anything below 350, 139 being a stop out. We're now back down to some key levels. 319.03 to 325.10, that's the must-hold zone here. If that were to break, I think we could come down to the 200 MA, which should be support now at 304.37. The maximum pullback that I could see on this, maybe 291.85 to 271s, depending on the market. If we saw the larger liquidation break in the tape, I'd be targeting those 291s and 271s. So if you want to do some type of a put spread or put ratio, those would be good lower strikes. If you're long something like the 325, sell 290, sell 270, one by one by one. The expectations for Apple, by the way, they're going into their Worldwide Developer Conference next week on June 9th, are so low at this point, I can't see it being a sell the news unless it's up enough into that. If anything, maybe there is some type of a revamp in the AI or Siri that could give it a boost. As far as Amazon goes, I like this stock for Prime Day, which is mid-July. As long as 201.95 holds on the pullbacks, it's fine. There is some resistance up into the 211s and 214s as we've seen recently, but overall it is holding well and acting well. Google, we talked about in the midweek video that we thought we would get a bounce off the 20 MA, and this was the time to do it. Very nice. It's working out. You could use today's low of day at 166.36 as a raised stop. I think that there's some resistance between the 200 MA at 171.28 and the 173.79, 50% fib of the entire range. Remember, that was the gap fill when we had seen the smackdown. It's interesting to me that Bitcoin has been acting weak. We did have a look above and fail. It is pulling back. The logical next step, if we can't get over 110,150, would be the 78.6 at 102,554. It's taking its time to get down there, which I think is encouraging, but look above and fails can often lead to seriously larger pullbacks. Bitcoin was weak before the market was earlier in the year. It has now been stronger than the market was, and now maybe weakening and softening, and that could signal some trouble for the tape because Bitcoin is sort of the ultimate risk-on, risk-off arbiter. Gold still acting well, seemingly getting some love, but we are still stalling at the downtrend high. I think gold here would need to punch out above the 312.14 high of day. If it can do that, maybe we do mosey on back up to 316.65, but anything below 316.65 technically could still see downside action. So far, we are still in a consolidation. It looks like a bit of a bull flag to me. I'd like to see price hold up here high and tight, and then one day have a gap and go, and that will be the one to chase. TLT, very key. Keep an eye on interest rates. It's back above the 20 MA. That's now the must hold at 85.81. I had said I thought as long as it held 84.89, it was fine. We are seeing a move up. The next level I could see being resistance between 87.42 and 87.64. That's the 38.2 of the range and the 50-day moving average. 100 MA is 88.40. 50% fib of the entire range from the 4.4 high down to the 5.22 low would be 88.69. So if you want to do some type of a call spread, maybe target 90s or 92s as your upper strike, depending on how far you want to go out. I like doing that maybe sometime out in January if you want to do leaps. Generally speaking, the market is up a lot. We could see a decent liquidation break to retest the 78.6s, but that really quote-unquote shouldn't happen if things are really going to go to the upside. I do question market's ability to clear 6,000. We may be in this consolidation range, maybe a little bit of pullback. I could see there being a bit of a buyer strike, maybe ahead of the jobs report, because just why not? Let's take that jobs day number. There will be an initial spasm at 8:30 a.m. You could trade intra-range with that or carry it forward to Monday, being long above or short below the jobs day range. Like and follow for more.